Welcome back to another episode of Capital Brew, where we break down the latest in market movements and financial news. Today is Monday, August the 5th. I'm your host Maxwell, and today we're diving into the exciting trading that has everyone talking. Last night, S&P 500 futures bounced back after a brutal day for the broad index. The S&P 500 futures rose 0.9% while Nasdaq futures saw a rally of 1.3%. Meanwhile, futures connected to the Dow Jones jumped 222 points or about 0.6%. This recovery follows a sharp sell-off during regular trading hours. The Dow plummeted by 1,034 points, a 2.6% drop, while the S&P 500 slid 3%, both marking their worst sessions since September 2022. The Nasdaq Composite didn't fare any better, shedding 3.43% and going deeper into correction territory. So what triggered this sell-off? A weak July jobs report on Friday ignited fears that the Federal Reserve might be behind the curve on rate cuts, raising concerns about a potential recession. These worries heavily impacted global markets, with Japan's Nikkei 225 experiencing its worst daily decline since Black Monday in 1987. US Treasury yields fell as investors flocked to safe haven bonds, and the Cboe Volatility Index surged to 65, its highest level since 2020. Over the past 3 days, the Dow, S&P 500, and Nasdaq have dropped 5%, 6%, and 8% respectively, marking their worst 3-day performance in over 2 years. A significant factor in this volatility is the unwinding of the yen carry trade, exacerbated by the Bank of Japan's recent interest rate hike, which strengthened the yen and affected global asset purchases. Quincy Crosby, LPL Financial's chief global strategist, commented, "After such a strong rally since last fall, valuations, sentiment, and investor positioning had become stretched. What markets are experiencing today is an unwinding of that bullish positioning, particularly evident in the yen and the carry trade." In terms of artificial intelligence, these stocks were hit pretty hard, with Nvidia and Apple dropping 6% and nearly 5% respectively. Both stocks did see some recovery in after-hours trading. The Van Ag Semiconductor ETF fell 2%, and mega caps Alphabet, Amazon, and Tesla dropped over 4%, though they too rose about 1% in overnight trading. There is growing concern among traders about when exactly these tech companies' investments in AI will start paying off. But despite the market turmoil, some investors view the sell-off as overdue in a market that had reached high valuations and new records. Keith Lerner, Truist co-chief investment officer, noted, "It's too early to say that the low is in. There has been damage done and the repair process will likely take time." However, the risk-to-reward ratio appears to be gradually improving as the market's bar for positive surprises resets lower. In other news, Palantir Technologies surged 12% in after-hours trading on strong quarterly results and the guidance lift, while Lucid Group rallied nearly 6% on better-than-expected second-quarter revenue. Turning to Asia, South Korean and Japanese stocks rebounded sharply in Tuesday morning trade, recovering from Monday's sell-off. Japan's Nikkei 225 and TOPIX spiked as much as 9% before powering gains to trade about 7% higher. The Japanese yen weakened to about 146 against the US dollar. South Korea's Kospi jumped over 4% and the Kosdaq was about 5% higher. Back in the US, BlackRock believes that stocks will recover from the global market sell-off as recession fears ease and the yen carry trade unwinds. BlackRock's investment institute stated, "We think risk assets can recover as recession fears ease and the rapid unwinding of carry trade stabilizes. We keep our overweight to US equities driven by the AI megaforce and see the sell-off as a buying opportunity." Additionally, San Francisco Federal Reserve President Mary Daly indicated that interest rate reductions are likely later this year, although specifics remain uncertain. Daly highlighted the importance of policy adjustments based on the incoming economic data, aiming to maintain economic momentum despite a weakening labor market. Rick Ryder, BlackRock's chief investment officer of global fixed income, suggests that the Federal Reserve should signal awareness of economic issues even if it doesn't implement an emergency rate cut. Ryder emphasizes the need for the Fed to evolve its communication to align with market expectations and economic conditions. To wrap it up, tech stocks showed signs of recovery in overnight trading after Monday's sell-off. Nvidia added nearly 3% following a 6.4% loss during regular trading. Major tech stocks like Alphabet, Microsoft, Meta Platforms, and Amazon gained over 1% each. The Van Ag Semiconductor ETF also rose more than 2%. As we continue to monitor these market developments, it's clear that investors are entering a highly volatile environment. Stay tuned for more updates and insights on Capital Brew. I'm Maxwell, and thank you for listening. Remember to subscribe to our podcast for the latest updates and insights into the financial world. Until next time, keep your investments informed and your strategies sharp.